Inflation data out Friday that is closely followed by the U.S. Federal Reserve showed the smallest annual increase in more than 2 years. According to a report from the Commerce Department, the Personal Consumption Expenditures Price Index, the Fed's preferred inflation measure, advanced just 3% in the 12 months through June, the smallest annual gain since March of 2021. The so-called core PCE, which excludes volatile food and energy costs, also showed price pressures were easing. It advanced 4.1% annually, the smallest gain since September of 2021. A separate report from the Labor Department on Friday showed that wages, which have been sticky, rose 1% in the second quarter. That was the smallest quarterly increase in 2 years. The annual wage growth rate also declined, but it is still higher than rates seen before the health crisis. The latest signs of cooling inflation could push the Fed closer to ending its aggressive rate hiking cycle. The reports come 2 days after the central bank raised its benchmark policy rate another quarter point to a level not seen since the global financial crisis.
They are no longer forecasting a recession.
Fed Chair Jerome Powell said there was a chance that inflation could return to the Fed's 2% target without high levels of job losses. That has raised cautious optimism of a soft landing for the economy envisioned by some Fed officials, rather than the recession that most economists have been predicting.
Hello, traders. Gary Wagner here. 11:13 in Honolulu, 5:13 in New York on Friday. Happy Aloha Friday, as we say on the islands. 28th day of July, 2023, and this is the Weekend Review. After yesterday's strong sell-off in gold, today we did see a respectable recovery. Gold is currently fixed at $1,958.80. This bases the most active August contract, a net gain of $13.20. With all of the major events that have occurred over the last 2 weeks, you would not know it if you looked at a weekly candlestick chart, which we are doing. In the case of this week, as well as last week, they are small-bodied candles with medium-sized tails. They absolutely can be characterized as a doji. A doji indicates either consolidation or a potential pivot. This doji here, for example, occurred after a defined downtrend, and it signaled that we would witness a key reversal and a move from bearish to bullish. In the same way, you can see this long extended rally, this doji, and then a price decline. It can be an exceedingly accurate candlestick that works a decent percentage of the time. The effect on gold of yesterday's PCE inflation report is clearly shown on this daily candlestick. That is this very large red candle, meaning it had an extremely bearish impact. There was technical chart damage. First, the high occurred at 1980, 38.2% retracement, and during the day it breaks below not only the 100, but the 50-day moving average and closes below the 50% retracement. Today, gold opened below the 50% retracement and closed above the 50-day moving average, which is a pretty solid sign of a potential recovery. It also created a 2-day Japanese candlestick pattern called a piercing line, which includes this red candle and green candle. It takes 3 candles to complete it, which is a confirming candle. I have just put up a textbook example of a confirming candle in a piercing line on a daily chart, which is the next candle following this green candle must be a green candle with a higher high and a higher low. As you can see in the example, you would want the close of the confirming candle to go higher or beyond the opening price of the red candle. If that happens, it is a very strong indication that we could be seeing gold ready to move back into a bullish demeanor and move to higher prices. As you know, as a market technician, I specialize in Japanese pattern types and chart types that are not very familiar to many Western traders. Charts like candlesticks, of course, have become common day. We have seen Henkinashi charts on my show, three-line break charts. But today I want to introduce a new chart that I believe has good merit. It should never be used alone, always with other indicators, but you should have it as a tool in your toolbox. It is called an Ichimoku cloud or Ichimoku chart. The definition is one look, and that is to say you should be able to, just by looking at this chart, get an indication of where a price has been and, most importantly, where it's going. The technique to use this type of a chart effectively is to look at the cloud and current pricing. Rule number one, if current pricing is above the cloud, it indicates it is in a bullish demeanor and you can expect higher pricing. Second rule, if current pricing is below the cloud, it represents a bearish demeanor and the potential for lower pricing. The third and final rule is if it is in The third and final rule is if current pricing is in the cloud, it represents that that market is currently in a transitory and changing demeanor or disposition. One of the most interesting aspects of using this type of chart is that it can be a leading indicator. And to use this chart type as a leading indicator, you first look at the price point of the last candle and then the color of the cloud that comes after that. If the cloud is green, it means it's most likely to move to higher prices. If the cloud after current pricing is red, it means you can expect to see lower prices ahead. The dollar was in essence neutral today, forming a candlestick called a doji candle. The dollar had a slight loss of 0.09%. The index is currently fixed at 101.45. While understanding how to use this chart effectively might take some time, my advice to you is to remember this one fact. The overall trend is up when the price is above the cloud, down when the price is below the cloud, and trendless or transitioning when the price is in the cloud. When we look at this dollar chart, we can see that as the market was moving up and was above the cloud, that represents a bullish market. When it was in the cloud, it was transitioning. Below the cloud represents it is in a bearish demeanor. To use the cloud as a leading indicator, look at the last candle. If it is below the cloud, that represents bearish market sentiment. If current pricing is above the cloud, that represents bullish market sentiment. For more information, go to Investopedia. This has been Gary Wagner, wishing you as always good trading. We'll talk to you after the weekend for the next daily update and review. Bye-bye.